From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 28, 2016. In just a moment, we'll be taking a look at the EURUSD, the euro versus the US dollar, for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days. First off, starting here on the NZD-USD, New Zealand dollar versus the US dollar, we have been selling the yellow shaded area here in the middle of the chart for the past couple of days. You can see the trade still going down here at the very bottom of the chart. 71.65 was the entry. Currently sitting with 25 pips. We've actually seen a good bit more than that as the market made the low yesterday. From the 71.65 level, you can see falling back down here, seeing about 55 pips of profit on the trade. So we're about half of that now, coming back up. We have moved the trade into profit by 5 pips, so you can't lose on the trade, but definitely want to see some more bearish side here happen on the New Zealand dollar. Let's take a look at this yellow zone again today as a potential opportunity to get in again if you're not already in it, or maybe even add on to the position if you closed some of the lots as it pressured down towards the 7100 level. And as long as it stays under that yellow zone, I'm looking for resistance and the continuation back down towards the purple shaded area. The risk in this scenario is pretty clear that it breaks back above the yellow shaded area. So we'll continue to watch that. Of course, we do have some U.S. data coming up at 8:30 Eastern U.S. time, about a half an hour from the recording of this video. Could change everything, but definitely watching for resistance again here at the yellow zone today for the New Zealand dollar. Another trade that we have going down here is the Australian dollar, AUD-USD. We sold it up here at the blue shaded area, top of the range that you see here, the black box. We've been studying that long-term range for quite a long time in the trade room. The blue and the green shaded areas at the top providing resistance 1, 2, 3, 4 times, coming up there and falling back down. So that's what we were looking for, selling opportunities, and currently sitting with 100 pips of profit on the remaining portion of the trade. We've locked in, of course, with the stop loss. Zooming in a couple of times. Some interesting things about this, though, is the fact that we are sitting on top of the 100 period moving average. So we needed to break underneath there if we're going to see further profit and the market continue to go down towards the bottom of that range that we just looked at on the zoomed out view. So it needs to stay underneath 75, 75, 7600, the pink shaded area there in the middle of the chart. It needs to stay underneath there to continue that bearish price action. Otherwise, support here, any negative US data that pops up today could see this turn back higher again and target back to the purple zone. Our stop loss, our entry, again, is way up here at the blue shaded area. So we're in no danger right now. And I've actually moved the stop loss just above. You see that red dashed line there? That's where the current stop loss is. So entry at the blue zone, stop loss is here. We're going to win either way. We've closed profit, and we're going, even if it turns back higher, we'll close out with profit on the trade. Next, moving over here to the US yen, another profitable trade for the week this week. The buy or the long position that we've taken was down here at the orange shaded area. Again, I've moved the stop loss into profit, can't lose. The entry is 104.20. The current stop loss is 104.50. So we've locked in 30 pips, can't lose on the trade. Just underneath the blue shaded areas where the stop loss is. We want to see it stay above the blue zone and really stay above 105 today and continue to pressure into the 105.50, 105.80 level. The yellow shaded area that's at the top of the chart is our next resistance. And of course, clearly, if it breaks above there, we'll look for it to continue to pressure higher. But we've locked in, we've closed profit, can't lose on that trade either. Yesterday, I suggested a potential buy on the USDCHF. It never made it down to my buy level. I placed a pending order at 99.10. It never went down there yesterday. Interesting stuff happening here on the dollar franc. If you just look here, if I just take a little quick, maybe I can get a box here real quick and put it here. Look at this, how it just kind of settled out here underneath the orange shaded area for a period of time. Let's change this up and make it a box. It settled out underneath the orange shaded area for a period of time, then finally broke out above it. Why is that important? Well, because that's similar price action to what we're seeing here around the blue shaded area. So I continue to focus on longs. I would have liked to have been in at 99.10, but it never went down there. So the next thing we look for is either a dip back down or it breaks through the 99.55 level, the blue shaded area, and continues that upside pressure. So that's what we'll be watching for today on news. If it's positive data for the U.S., we look for the potential break of the blue zone like it did there at the orange zone, and continuation back to the parity level, the pink zone, at the very top of the chart. Next, moving over to the EURUSD for today's trade, similar situation that we've been looking at all week long. The two patterns here that we're studying, the blue shaded area inside the black circle, resistance, 1, 2, 3, fourth day, found resistance, went down to the orange zone. Well, take a look. Look at the similarities here in the blue circle. 1, 2, 3, 4. Now we're in 5 days underneath the 1.0925 level. This is the area to focus in on. We've actually traded it already this week and sold it here into the orange shaded area earlier this week. So again, I think that this is the spot to watch. We'll watch the news at 8:30. If it's positive data for the U.S., I still think that it's status quo. We continue to sell the orange zone. Look for it to go down into the 1.0800s. The risk here is that it breaks above it. So while it did take me out at break even on the trade that we were in from yesterday, I'm now watching for another opportunity, once again, to continue the bearish pattern, continue the downtrend, find resistance at the orange zone, and head on back down to the low 1.0800s for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.